Ranade, Chief Economist at the Aditya Birla Group. Dr. Ranade, thank you very much for your time, sir. Good morning, Prashant here. You know, I'll get to the GST in a bit, but I want to start with an article that you wrote in the newspaper Mint, where you essentially are advocating a tax on long-term capital gains in the stock markets. So let's just begin there, sir. What is your argument?
Well, yeah, Prashant, I know that this is a little bit sensitive because the market tends to get spooked by any talk of such taxation. My argument is just on the basis of, what should I say, bringing some rationality in the taxation system. If you go back, this long-term capital gains on gains made beyond 1 year, holding the stock for 1 year, was made tax exempt back in 2004. And that time the logic was that we had to bring it on parity with the tax exemption given to people, investors who come through the Mauritius route. Now, as you know, that the Mauritius treaty was amended earlier this year to end that anomaly. So we have to revisit this whole logic of bringing domestic investors on par. That's argument number one. Secondly, if you look at global practices, the long-term capital gains are actually taxed at 15%, for example, in the US, and short-term gains are taxed as regular business income. We are giving long-term capital gains at zero tax. So therefore, there is reason to examine whether we can give this zero tax status to Indian investors at a sufficiently longer duration, which is 3 years, which is what I'm saying. The third reason, Prashant, that this is the most important reason, is that India's mix of direct and indirect taxes is roughly in the ratio of 35 to 65, which is exactly the opposite of world trends. Among most of our peer countries, especially developed countries, the ratio of direct taxes to indirect taxes is 65-35, which means that we need to go a substantial way to reduce this skew, to correct this skew. We seem to have so many indirect taxes, you know, and GST is a very prime example of that.
Dr. Ranade, just a quick point.
Indirect taxes tend to be unfair.
Yes. So you made your argument there. Just 2 points. One, you give a figure which you say are taxes foregone by not taxing long-term capital gains in the stock market. I mean, it's a large figure. And that seems to be out of whack what is commonly perceived as gains that you can make from long-term capital gains. Could you tell us where that figure is coming from?
No. This is data put out by the government, by the income tax authorities. And the last data that we have is for assessment year 2014-15. And it said that long-term capital gains, which were tax-free for that year, was almost 65,000 crores. And I'm sure it's gone up since then. So I'm saying that this is the large chunk of direct, income. Capital gains is income. If you tax it, it's a direct tax. So is it can we afford to have such large gains go tax-free? That's one. Secondly, I'm saying that we should have long-term capital gains at zero tax, but beyond 3 years, which was the norm earlier anyway. That if an investor in 1 year, how can you tell whether a company is going to turn around or give a sustained performance? You need to observe and hold stock in a company anyway for 3 years typically. And beyond 3 years, if you're going to make capital gains, that's going to be tax-free. All I'm saying is that we should seriously consider, in the interest of those 3 reasons I gave you, can we extend define long-term capital gains as anything which is beyond 3 years? And incidentally, we also need to bring parity on the way we treat capital gains on variety of asset classes, not just stocks, bonds, real estate, gold. I think there is a great, very, very nice article by Monica how we define.
Okay.
Also varies from asset to asset. Sometimes it's 1 year, sometimes it's 3 years. We need to bring parity.
Okay, so you're recommending 15% LTCG. That's in line with global practices.
No. Ekta, I said the US taxes LTCG at 15%. I'm saying we should tax it at 0%, but keep the duration as 3 years. Minimum holding period is 3 years.
As against 1 year right now. Dr. Ranade, you were always part of pre-budget discussions. You're one of the economists who is in those consultations. Should we expect some move on this, sir? I mean, Is the government looking at this? I mean, are there? Yes.
No, Prashant, the pre-budget consultations are done with a variety of stakeholders,
Yes,
as you
yes,
know.
of course,
This is
of
part
course.
of the routine exercise that the government does and the finance ministry does. They meet bankers, they meet agriculture
course.
people, they meet people from industry, they meet economists, and we all get a chance to present our viewpoint. So what the government does is up to, the final decision is obviously with the policymakers, but we all may get a chance to, to make representations as well as have a frank discussion. It's actually an interactive session. It's not purely that it's only not a one-way conversation, it's a two-way conversation.
Okay, fair enough. There are some visuals coming in from Sundar Pichai. Remember, he's in India to announce initiatives for Indian small and medium enterprises. So there will be some amount of takeaways which we will get you from that event. But those are some visuals which are coming in. Mr. Ranade, the other point that I wanted to actually touch upon, which is, not to do with the budget, but is to do with, the advanced estimates which are coming out on Friday. With growth, we have a lot of high frequency indicators, plus we have the services PMI, which is indicating that maybe things are going to look a bit sluggish. Have you worked the numbers when it comes to, say, GDP, what we can expect specifically in Q3, and what the advanced estimates could be around when they are declared on Friday?
Yeah, Ekta, we have been looking at the impact of demonetization on the Q3 and Q4, possible impact on Q4 as well. So I think we are going to see a number which is probably going to be around 6.5, 6.8% of real GDP growth rate. As it happens, even the government estimates, which are advanced estimates, by the way, they are saying that they may not be able to fully capture the impact of demonetization because a lot of the data collection is still incomplete. But I do believe for the 2 quarters, which is Q3 and Q4 of this fiscal, there will be some impact. But also expect
Okay.